for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl? Superwoman.
I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And I think my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that is this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed. This is Bloomberg Business Week. Carol Masser along with Alex Steele. I'm in New Jersey. She's in our Bloomberg Interactive Broker studio. It is Thursday. Feels like it should be Friday. It's not. Alex, man, there's a lot going on.
But it's not Wednesday. Let's be grateful.
You are the ever optimist. I love it.
So not true.
All right. Well, listen, we're going to talk about the markets because I feel like it's all about pivoting. If we're looking for a theme, I feel like today investors back in love with technology shares. Thank you very much, Apple, because I feel like that's a big story today.
Yeah, definitely a big story. Also, I mean, bond market wide open. Apple in the market with a huge bond offering. I mean, yeah, the 30-year didn't go that well earlier today, but appetite for those kind of companies that can support it with cash flow still very solid.
Yeah, no doubt about that. Lots to talk about, and the world continuing to pivot on this Thursday. We'll get to that over the next 4 hours. 4 hours, excuse me. First up, let's get a check on that trading day. God, Charlie, I got kind of worked up just getting to you.
I was going to say, what the heck was that? But here's what's going on. It's broadcasting. We plow right through it. Here's what's going on. We've got the Dow, the S&P, they're both lower. NASDAQ higher. Number of headlines to pass along to you. We were talking about Apple. It has set the size of a 4-part bond offering at $5.5 billion. Egypt's central bank has left the lending rate there at 10.25%. The Mexico central bank cutting the overnight rate to 4.5% from 5%. That word coming just a moment ago. Also, the governor of Texas says the positivity rate surge is under investigation. S&P is down a point right now, less than 0.1%. NASDAQ's up 63, up 0.6, while the Dow is down 66, lower now by 0.2%. Technology shares higher. The broader U.S. equity market mixed as investors mull the stalemate in stimulus negotiations. The 10-year down 9/32 with a yield of 0.71%. Gold up 2.1% right now at $19.55 the ounce. And West Texas Intermediate crude down 1.1%, $42.19 a barrel. Carol. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I just get worked up, Charlie, when I know we're going to you. That's just the way it is around here. All right, Charlie Pellet with a check on the markets. Let's set the Business Week agenda because we've got lots to get to, including the trade, but of course, the day's weekly jobless claims, the economic numbers. Mike McKee with us, international economics and policy correspondent at Bloomberg News. He's with Alex in our Bloomberg Interactive Brokers studio.
It's not lonely here.
We're talking about you, Carol.
It's a party. Dave Wilson, stock editor at Bloomberg News. He's on the remote access from New Jersey. But Mike, you're kind of our go-to guy on this Thursday and a lot of Thursdays because of that weekly jobless. Better number?
Well, yeah, sort of by definition, it's a better number, but it's not a good number. The thing that we tend to forget here is we're talking about initial jobless claims. We're talking about people filing for the very first time, and it's still almost 1 million 22 weeks into this thing. So we still have a lot of problems in the labor market. And then you look at the number of people who are getting some kind of unemployment insurance check, 28 million people. So it's still an enormous hole that we're in.
Well, Dave Wilson, does the market care about these numbers anymore in that we know that they're high frequency, but does it give us any indication of, say, where we're going to go in D.C. or how the underlying stock market should be doing?
They care to a point, but it's not like what we're seeing week in and week out is being driven by them. And sure, if you look at today's trading, S&P 500 hit its low of the day right out of the gate, an hour after those numbers came out. Since then, though, it's kind of stabilized and, not a whole lot of direction and not a whole lot of gains outside of, shall we say, big tech, the Apples, and which you already talked about a little bit, Microsoft's, Amazon's, Facebook's of the world. So to that extent, I mean, you're seeing a number of the more economically sensitive areas of the market not doing especially well. Energy, finance, industrial companies. So, I mean, does the market care? I mean, to a point it does, but, it's not like it's necessarily the be-all and end-all from week to week.
Yeah, well, but from week to week, I do feel like, Mike, we're living on some of these economic data points. I mean, are you getting any kind of clear trend here when it comes to what the economy is shaping up to be?
If there was a clear trend, it'd be just sort of that we're moving sideways at this point. You had the slightly better numbers on jobless claims today, but I was also looking at some of the other alternative indicators. Open table restaurant reservations are down, and TSA plane boardings are down. Retail sales in terms of the Johnson Red Book up just a little bit, but still way down on a year-over-year basis. So we're not seeing huge improvements here at this point, and that kind of gets to what the Fed officials who've been speaking this week, and Eric Rosengren, when he was talking to me yesterday, are talking about, that the economy is not getting rapidly better because we're not seeing the virus go away. We're not doing a good job of managing the virus. There's been an agreement that essentially we have done a lousy job on containing the virus. There has been a discussion about whether you put the virus first or put the economy first, and the Fed guys are saying it's not really a trade-off here. You got to deal with the virus or you can't fix the economy.
Well, to that point, retail sales for tomorrow, how should we care? Based on what you just said. I've been shopping, by the way. I've been doing my thing.
You've been very patriotic.
Carol, you?
I've been doing some stuff online.
You're both getting awards.
Not from our husbands.
Retail sales.
True.
Retail sales will be up a little bit. Part of it because gasoline prices went up during July, and that everything is counted in terms of dollars. And we'll also see perhaps a little bit of increase in online shopping. But restaurants and bars are probably going to go down because of the COVID cases around. So we'll see a slight increase, at least that's the forecast, in retail sales, but nothing like we saw in June. And then the problem is this only captures goods purchases. This doesn't capture services. We have to wait till the end of the month, the PCE report for that. Right now, it looks like services are something that we've really given up on for the time being. We're not going anywhere doing things. So spending is probably restrained. And then, of course, for August, we've lost that $600. And so for the unemployed, so you've got that drag on spending as well.
As you say, it's sideways. Dave Wilson, quick tease for your chart of the day coming up.
Oh, you'd think with gold being up above $2,000 an ounce, that gold mining stocks would be gaining on the rest of the market. No, they're not.
Okay, that's a tease, that's for sure. All right, Dave Wilson, thanks so much. Dave's going to be along a little bit later on with that chart and his stock of the day. And Michael McKee, always great to get your input. He's international economics and policy correspondent at Bloomberg News. He's in our Bloomberg Interactive Brokers studio. So let's talk about this show, Alex, because we got a lot going on. We're going to get our update on the virus. Andy Pekash at Johns Hopkins, he's been a great go-to voice for us, just kind of making sense of what's going on, the latest numbers, the latest, hunt for a vaccine. And then we're also going to check in with the CEO at Sangamo Therapeutics. They're trying to keep up their research. They're not directly involved with the COVID vaccine, but they're trying to keep their work up to make sure that they can help out their patients.
Yeah, so it's such an important point, right? Like, how many doctor visits have you put off because we're dealing in the middle of a pandemic? But if it's not going to go away tomorrow, you can't do that. So I'm really interested to see how funding and how manpower has changed in light of COVID. That could be really fun. Also, you're a gym rat.
You're a gym rat.
You're a gym rat.
No, you.
No, you.
So have you been to a gym lately?
No, they're not even open here. Are they open in
wait,
Jersey?
Can I just share with everybody, because I said, you're doing Pilates, you said. And I go, oh, yeah, where you going? Like, is it around, near the office? You're like, no, it's in our wardrobe room.
Yeah, so I have my trainer on my phone, and I have my mat, and I do it in the wardrobe room and hope that no one comes in, because I'm sure it's really weird. But to that point, I mean, I don't know what would make me go back into the gym, but we're going to get, the read from the Crunch CEO, Jim Rowley, which should be really fun.
Yeah, and we're also going to talk about comedy coming back. We've got the CEO and founder of Comedy Cloud, and then we're going to get to some of the most read stories on the Bloomberg. That Apple story, it remains among the most read on the Bloomberg today about their subscription bundling. And then Wall Street bankers, apparently they're doing some odd jobs, so we'll talk about that with Sonali Basak. Meantime, let's go do the Bloomberg Business Week Bite of the Day. Alex, it's one number that tells us a lot. Today's number, nice and round, it's 10%. Manhattan apartments are having a meltdown. The median rent, with concessions like free months factored in, plunged 10% last month to $3,167, according to Miller, Samuel, and Douglas, which I always think about. People around the country are hearing it, and they're like, that's down.
Yeah, no, that's down.
It's all perspective. All right, lots to come over the next 4 hours. Stick around. We have tons to do. First up, though, check on world and national news headlines. Let's check in with Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. President Trump says he is unwilling to include in any pandemic relief package money for the post office to handle an influx of mail-in ballots. He told Fox Business News voting by mail opens the door to widespread fraud, even though there's no evidence to support that claim.
If we don't make a deal, that means they don't get the money. That means they can't have universal mail-in voting. They just can't have it.
Senate Minority Leader Chuck Schumer is encouraging those who do rely on the post office, including seniors in need of medicine, to put the pressure on.
Call the White House, email the White House, tell them you want to keep the post office and they shouldn't be cutting it the way it is.
Trump's opponent, Joe Biden, says by withholding money from the post office, Trump is trying to indirectly steal the election. Well, Facebook has launched a voting information hub to give users election information, including links to register to vote or volunteer at a local polling station. Company officials say it'll reach 160 million Americans before November's election. Google has also announced today an initiative to distribute accurate voting information and to fight efforts to mislead voters about the electoral process. 9 Democratic senators, 1 independent, have unveiled a plan for reforming college sports with an athlete's Bill of Rights. It calls for college athletes to have the ability to earn money for their names, images, and likenesses with minimal restrictions. The senators also want to ensure for the athletes long-term medical coverage and treatment and enforceable medical standards. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Masser along with Alex Steele. Alex, I love this story only because I feel like this is just a reminder we need to think about our community. It's not just about what we need right now, one individual. And the story on the Bloomberg has to do with New York Governor Andrew Cuomo, his imposition of a 2-week quarantine order. We know this. We've been talking about this a lot on air, about people traveling to New York from those states that have high levels of the virus infection. A federal judge ruling that it doesn't violate the Constitution. And apparently a woman from Arizona said differently.
Yeah, so she was basically suing because she said it violated her constitution. She wanted to come to New York to help a friend move, and then the self-quarantine for 14 days or you get a $10,000 fine meant that she couldn't do that. And she called the ruling or the quarantine requirement arbitrary, capricious, and irrational. I'm trying to find quickly if New York sued anyone or anyone from New York sued any other state when all the states in March were like, we don't want any New Yorkers, get away from me.
Remember Florida? Right?
Remember Maine?
Remember Maine? Rhode Island stopping cars? I mean, exactly. And listen, I just, this whole idea we constantly hear from doctor after doctor. I'm sure we're going to hear it from Dr. Andy Pekash, who's going to join us from Johns Hopkins. It's so simple about social distancing, masks, all these things. CDC reminds us, the science behind it about how do you get control of this virus. And if we're bringing in or constantly worried about people coming in from other states and reintroducing the virus, we're never going to get anywhere. We're never going to reopen.
Yes. I guess that also said, I think to your point, if we could trust every state to do the same thing, like if there were some sort of federal requirements, then maybe we wouldn't have to resort to these kind of things because we knew that everyone was following these guidelines, like seatbelts.
Yeah.
I mean, everyone follows seatbelts, so you don't have to worry about whether or not you're doing that cross state lines. It's kind of the same situation, but we don't have that. So then, yeah, you gotta quarantine for it. We did it. Come on, not that big of a deal. We quarantined for what, 2 months?
I've kind of still been doing it.
Yeah, you still are doing it. That's true.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow close to the worst level of the day right now. Technology shares higher. S&P has turned lower. Right now, we're looking at a mixed Thursday with the S&P down 8, lower by 0.2%. The Dow is down 89 points, down by 0.3%, while NASDAQ holding on to a gain up 35 points. That is an advance right now of about 0.3%. Cisco Systems weighing on the Dow after earnings. We have got Cisco down by 11.5%. Gold advancing 1.7% now at $19.49 the ounce. The 10-year, the yield there 0.72%. West Texas Intermediate crude down 1.2% now, $42.15 a barrel. After the bell, we will be hearing from Applied Materials and Baidu. Applied Materials down 2.2%. Baidu lower by 0.9%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Alex Steele on this Thursday. This week, as we've been reminding everybody, the magazine is a special issue about the path to a COVID-19 vaccine. It's online, on the Bloomberg, and also on newsstands as we speak. Back with us is someone who has been a guiding voice when it comes to the virus. Andy Pekash is a professor of molecular microbiology and immunology at Johns Hopkins University, Bloomberg School of Public Health. The Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Andy joining us once again on the phone from Baltimore. Andy, so nice to have you back with us. Gosh, I'm trying to figure out where to start. And I got to say, there's a troubling headline out of Florida about out of China, about two patients who recovered months ago from the virus and then tested positive again. And so, again, we're all getting a little bit nervous about this virus and its ability to linger on and reappear. Tell me a little bit about your thinking about that.
Yeah, no, it's one of, there's so many important questions that need to be investigated, but one of the critical ones is if you've gotten infected, are you protected from reinfection, and if so, for how long? And the reason this is an interesting and important question is when we look at some of the other coronaviruses that infect humans, we sort of see two different stories. We see the ones that cause very severe disease give you some immunity that presumably will protect you from reinfection. But the ones that cause mild disease, many people can have reinfections after a few months or even a year. And this coronavirus, the COVID-19 or SARS-CoV-2, causes both types of disease. So the real concern is that we're getting people that are infected and they're either mounting a really strong, long-lasting immune response, or maybe they're not mounting a very long-lived response at all, and they might be susceptible again in a few months. So these are the kind of questions that only take time to answer because there hasn't been enough time for us to really monitor people who are getting reinfected yet. But again, it's one of the most important questions to address in terms of understanding how this epidemic is going to progress.
First of all, Dr. Pekash, it's so good to talk to you because I hear you on radio and surveillance all the time. So you're kind of like the COVID celebrity to me right now. So this is pretty exciting. I guess my concern with the reinfection and the antibody thing is why does it affect people so differently? I've heard many different thoughts, such as, I don't know, like your blood type. If you got the disease really badly, you have better antibodies and then maybe more immunity. If it was a light virus, then you have less. What's the reality?
Well, one of the things that we're pretty clear about is that if you're in particular age groups, and so if you're over the age of 50, for instance, if you have a number of secondary conditions such as heart disease and respiratory conditions, and there's good data suggesting that if you're male as opposed to being female, you are going to be more prone to having the disease and severe forms of the disease. So that's probably telling us there's something about being in a slightly older and in these groups that have secondary medical conditions that's making you more susceptible to the severe disease. What we don't understand is exactly what those mechanisms are that are being activated. It's also interesting that many of the severe cases of COVID-19 occur week or 10 days after you initially get infected, and there's not a lot of virus in those people at the time that they're suffering the very severe disease. So we really do think that the virus has somehow early on turned your immune system into something that is overactive, that's causing some protection in terms of preventing the virus from replicating, but can't be scaled back fast enough, so then it starts to cause damage to your lungs and eventually to other organs. And understanding what that trigger is that causes your immune system to sort of go overactive is another one of the really important questions that are being addressed now.
We've also seen Europe, for example, start to talk about more quarantining, shutting down different areas. We have a spike in German cases that was reported overnight versus here in the U.S. where things seem to be leveling off. Do we know who has it worse right now?
Yeah, we were always we should have always been prepared for a stage in the epidemic where we would be dealing with cases, but they would be at a low enough number so that extensive testing and contact tracing of people who were infected would be able to limit the spread of the virus. Many places in Europe, New Zealand is actually another great example right now. We're relatively low in cases for a while and are seeing some upticks. That's not completely unexpected, but what needs to be in place is that testing and contact tracing network that will then identify and limit those cases by using individual isolation, as opposed to what we had to do here in the U.S., which is shut down entire cities and states because the virus was so widespread that there was no way to identify just individuals and keep them from spreading the virus. So we'd like to get to that stage. Many parts of the U.S. are seeing leveling of cases, but they're leveling off at numbers that are way too high for us to be able to handle with our medical infrastructure. They need to go down to get to manageable levels before we can have these other public health interventions really sort of come in and effectively work to keep the virus down.
Andy, we're going to do a little bit of news, and then we'll come back and continue the conversation. Dr. Andy Pekash with us, professor of molecular microbiology and immunology at Johns Hopkins University Bloomberg School of Public Health. As I mentioned, it is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. We'll talk to Andy about, I want to see what he has to say about the virus out of Russia this week, and the vaccine specifically to treat that virus, to see what he has to say, and also about school reopening. So I forgot, he is really like a star.
No, seriously, like I actually meant that because I used to listen to All the Time on Surveillance.
I know, I listen in the morning too, and he's been really great coming on a lot, so we really appreciate it. And we'll get back to our conversation in just a moment, right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week on this Thursday. Carol Masser, along with Alex Steele. Jason Kelly is off this week, and we're going to get back to our conversation with Dr. Andy Pekash over at Johns Hopkins University Bloomberg School of Public Health, because we got lots more to ask him, Alex.
Yeah, we do. Schools.
You want to talk about schools?
A little bit.
Okay, we'll get to that in just a moment. Let's get back to your top business headlines, and let's check in once again with Charlie Pellet.
Thank you very much. And here's what's going on. Moments ago, we hit the low of the day on the S&P 500 index. Did see a momentary bounce back, but right now, looking at a 7-point drop in the S&P 500 index. It is a mixed Thursday. Investors mulling the stalemate in stimulus negotiations, along with signs of an economic recovery. Treasury yields rose for a fifth day. The dollar weakened. Right now, we've got the 10-year, the yield there, 0.71%. As for equity markets, I mentioned a 7-point drop in the S&P, down 0.2%. The Dow now lower by 103 points. That's a decline of 0.4%, while NASDAQ higher by 33 points, up now by just about 0.3%. Apple helping push NASDAQ briefly past its closing high. Apple shares, they are advancing now. Apple is up by just about 2%, but on the minus side, Cisco weighing on the Dow. Cisco shares after last night's earnings report plunging now by 11.5%. As for the market backdrop, Jay Jacobs is head of research and strategy at Global X Management. He was interviewed this morning on Bloomberg Television.
You're starting to see the breadth of this rally starting to go beyond just those big tech names. You're seeing it in industrials in the last month. You're seeing it in value names. The S&P equal weight has been outperforming the S&P market cap weighted index. So as the breadth of this rally starts to increase, I think that gives everyone more confidence that this is really not just a FANG story. This is a U.S. market story.
And again, worth repeating in terms of some of the big technology names, Cisco is down now by 11.5%. 10-year yield, as I mentioned, 0.71%. Gold up 1.4%, 19.43 the ounce. Crude is down 1% right now. A barrel of West Texas Intermediate crude, $42.24. After the bell, we'll be hearing from Applied Materials. Shares lower now by 2.4%. Baidu is down now by 1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. I'm pleased to say that we are back with Dr. Andy Pekash, professor of molecular microbiology and immunology of Johns Hopkins University Bloomberg School of Public Health. The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Okay, doctor, I teased it. School. I have a 6-year-old. She's going into first grade. She's in public school. What's the risk for me in the fall?
Yeah, again, such an important question. I mean, the things that we know are that, first of all, you've got to have community control of infections before you can even think about opening schools. Schools by their nature are exactly the types of places that you don't want to have open when you have rampant virus spreading in the community, because you have people getting together in small rooms, coming in close contact with each other. At schools, you're constantly talking and putting virus potentially in the air. So you have to have control of infections in your community before you can think about opening schools. The other thing about kids are, I think we initially were a little bit not so concerned about children, because it didn't look like kids were getting infected with very severe disease at a very high rate. That seems to hold true. So kids won't get as high a severe rate of disease as elderly do. But what we're starting to see now is that kids actually are getting infected at rates close to other age groups. And when kids get very sick, they tend to go to very severe disease much quickly. So kids are not immune to this infection. They can suffer severe disease, and it's important to know that even if it's something like 0.1% of kids suffer severe disease, if you have 1 million kids, that's 1,000 kids that are going to be hospitalized with infections. So even a small percentage of severe disease can turn into a lot of difficult cases, and kids can spread the virus to other individuals who may be at a higher risk. So you've got to have control of the virus in the community, and you've got to roll out schools in ways that maintain some level of social distancing and mask wearing to minimize the potential of spread in those environments.
All right, so a very simple question, and forgive me because I don't know if you've got kids or if you do, what age they are, but would you send kids to school right now?
It would very much depend on the local conditions. So here in Maryland, we have relatively good control of the virus. If my school were rolling out plans where they would have kids coming in on limited days, smaller numbers of kids coming in at a time, and keeping as much of the mask wearing and social distancing in place, then I think I would consider it. My kids are older, so I just dropped off my daughter at graduate school, and my son is a freshman at college. He's living in a residence hall with a number of other students. There's some social distancing that's being put in place and mask wearing that's put in place there. So again, and his school is in a state that has good control over the virus at this point in time. So those are I think there are ways that you can open schools, but you have to keep these basic public health principles in mind when you're doing it.
So, like, I'm thinking my daughter, she's 17, she's older than Alex's, but again, goes to a school in the city, but they are creating pods so that kids will be largely, especially the younger kids, will be in a classroom and they're not going to be moving around. Yep. They're doing kind of a hybrid. They are doing complete masks. They're controlling, how kids go up and down stairs. They're even doing face shields for the kids.
Oh,
so
really?
That they're supplying because when kids have to eat. So they are, kind of going into, high gear in terms of how they do it. Makes me feel comfortable, but I still, I'm a little nervous, Andy.
Absolutely, and there's no way that we can get to a zero risk scenario here because there are always going to be situations where things where infections can be spread. But what we practice here in the laboratory is a similar principle that can be practiced in public. You don't rely on one particular thing to protect you. You put in place a number of different things, and the combination of those things then significantly lowers the risk for you in terms of getting an infection. So not too dense classrooms. Face masks or face shields are actually a very popular thing here in the hospital too, in terms of dealing patients and medical doctors dealing with each other. Those multiple things in place will help you reduce that risk to a manageable level.
In 20 seconds, do kids recover faster than adults?
Most of them do.
That was less than 20 seconds.
Really good job. Wait, can I do a follow? Another 10 seconds? The Chinese vaccine, not the Chinese, the Russian vaccine. Don't get too excited.
We have not seen the data. It's possible that both China and Russia have vaccines that work, but all we've seen so far is press releases and political speeches. So we need to see the data, we need to see efficacy, and we need to see safety.
Yeah, we need a lot more information. Dr. Pekash, Alex and I could talk to you for hours. As you can tell. So come back soon. Dr. Andy Pekash, Professor of Molecular Microbiology and Immunology at Johns Hopkins University, Bloomberg School of Public Health, and of course the Bloomberg School of Public Health supported by Michael R. Bloomberg. All right, back to World and National News headlines. Back to Nancy Lyons.
Hey, Carol, President Trump is making it clear he will not allow money for the Postal Service to be part of any new coronavirus relief package. He repeated to Fox Business News today his unsubstantiated belief that more mail-in voting will increase fraud.
They want $25 billion for the post office because the post office is going to have to go to town to get these ridiculous ballots in. There's nothing wrong with getting out and voting.
Democrats have pressed for the funding to ensure that the Postal Service would be able to handle an increased share of mail-in ballots given the dangers of the spread of COVID-19. Israel and the United Arab Emirates have reached an agreement to fully normalize relations as part of a deal to halt the annexation of occupied land sought by the Palestinians. Israeli Prime Minister Benjamin Netanyahu.
This is the greatest advancements toward peace between Israel and the Arab world in the last 26 years, and it marks the third formal peace between Israel and an Arab nation.
President Trump hails the deal as historic and says it will facilitate peace in the Mideast. The move means the UAE joins Egypt and Jordan as the only countries with fully normal ties with Israel. Palestinian leaders are criticizing the deal. A U.S. official visiting Lebanon says the FBI will join Lebanese and other international organizations in investigating last week's deadly blast in Beirut. Undersecretary for Political Affairs David Hale says the FBI was invited to participate by Lebanese authorities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Alex Steele, Carol Masser here, and a story we kind of just teased a little bit in our bite of the day. It's specifically looking at Manhattan apartment rents plunging 10% because of the pandemic, Alex.
Yeah, so, okay, if you haven't lived in New York, it's really expensive to live
I love
here.
when you start off like this.
Yeah, if you have lived in New York, these numbers will be really interesting. So Brooklyn rents, for example, only fell 0.5% last month. The median is still about $2,900. That's the median. Now, Northwest Queens, new leases fell 60%, and the median rent went 15% lower, $2,400. First of all, that seems insanely cheap. For New York, I hate to say it.
Yeah.
But also, I mean, I think obviously, Carol, it's a broader trend. People are leaving. They don't want to be here in the middle of COVID, going back to their parents' house or whatever. Do they come back?
Yeah, it's amazing too. Just we know it as we talk to so many different guests. I mean, anybody who was initially, based in New York, they have gone to weekend homes, country homes. I know, we've got families that we know that have rented a house in suburban New Jersey just because of the shutdown.
Totally. I have the similar anecdotal stories. I guess because, why do you come here? You come here because it's New York. There's access to so many arts and culture things, and you have a huge social scene. When you can't do any of those things, why would you be here?
I know.
Living in New York is really hard. I guess I'm just curious to see if it's a 9/11 situation where we start to get like rents that come like first month free, all these amenities until the market gets back, or if this is really a structural shift in how we view the work city world.
Right, because think about how many times we've talked about, the demise of big cities, and yet here we are, and we've seen so much development back in New York City. So I guess time will tell, and it just might be a longer timeline, perhaps, before things start to settle down. I do wonder, too, about landlords who might be struggling, right, too, especially if people start, they're not paying their mortgages or paying their rents, right? We know those stories already.
And you can't get evicted. That got extended, too, so definitely trickle down.
All right, this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks remain mixed. The Dow, the S&P, they're both lower. NASDAQ is higher. Apple helping push the NASDAQ Composite Index briefly past its record close. Apple shares, they're advancing right now by 1.8%. We've got NASDAQ higher by 36 points, up 0.3%, while the S&P and the Dow, as I mentioned, both lower. S&P down 6, little change now, down by less than 0.2%. The Dow is down 102 points, down by 0.4%. After the bell, we will be hearing from Applied Materials and Baidu. Shares of both companies are declining. 10-year down 10-30 seconds with a yield of 0.71%. Gold is up 1.6% at $19.45 the ounce, while West Texas Intermediate crude oil down 0.9%, $42.27 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been mentioning that this week it's a special vaccine issue by Bloomberg Business Week, and it looks at the biggest challenges, the promising solutions, and really kind of the weird science when it comes to getting a vaccine for the virus. It's all about a path to that vaccine. And one story is really fascinating. It's about the healthcare Avengers fighting the anti-vaxxers. And writing that story is Bloomberg News reporter Thomas Buckley, who joins us on the phone from London as we speak. Thomas, nice to have you here with Alex and myself. Tell us a little bit about your story, because this is certainly a different take, if you will, but certainly a very important part of the COVID-19 vaccine story.
Absolutely. Hi, thanks so much for having me. Basically, the way that I've looked at this story is that I've been thinking for a long time that maybe something should be written about the anti-vax movement of size, given that over the past decade, the movement has really exploded in terms of influence. It's propagated on a number of different social media sites, with Facebook and YouTube really being the two key targets. And the medical community at large hasn't really responded to this as quickly as they would admit they should have done. But within pockets of the medical community, you'll find people like Zubin Damania, who's a former physician, who's taken to social media, much like the anti-vaxxers have, and has been using their own playbook against them. So we're thinking, catchy hashtags and catchy fonts and, using a lot of comic effects. And in doing so, he's managed to turn a bit of the tide against anti-vax. So I thought that was maybe a more hopeful story to pursue rather than the rise of the anti-vax movement.
That's so hopeful of you. I'll take that. But before we get to that, it'd be helpful for me to understand the anti-vaxxers. Is that a U.S. story? Is it global? Is it more one area than another? Is there a way to kind of siphon off who this quote-unquote group is, for example?
So the groups really operate quite internationally, and they're relatively informal. You'll have a number of different Facebook groups, hundreds upon hundreds of them, where people gather. They're in different languages, obviously, based on where these people are geographically, but I can tell you that, for example, in France, it's up to about a third of people who don't believe that vaccines are safe, despite the scientific consensus pointing towards the fact that they are.
Say that again. Say that number again.
Up to a third in some parts of France, which is obviously quite concerning on the basis that, for example, if we come back to the States, we have seen a resurgence in diseases that are largely preventable, like measles, for example. There is such ambivalence about the measles vaccine that last year we saw, the worst outbreak in a quarter century of a disease that, again, is largely preventable. So it's not only the US, there are other parts of Europe and of Asia, including the Philippines, where things are not looking so rosy for vaccine adoption, but it's in the US that they seem to make the most noise.
So tell us a little bit about this guy, Zubin Damania, because he's an interesting character, right? And he's been out there, basically, making this viral fight for those who are anti-vaxxers or against them.
Absolutely. So he is a former hospitalist at Stanford. He went to Stanford Medical School after graduating from Berkeley, grew up in California. Both of his parents are physicians. And it's when he was working as a hospitalist taking care of patients who have very acute illnesses that he came across one of his pediatrician friends telling him about a decade ago that in enough parents were refusing to vaccinate their children that we could possibly see a resurgence of diseases that we consider to be more or less preventable. Now, that was quite prophetic, really, because, 10 years down the line, here we are, and we are seeing that resurgence. And so ever since then, in 2010, and having that conversation with him, he thought, maybe I'm going to try and educate these people who are refusing to vaccinate their kids in the same way that they're being educated by the anti-vax movement. And so he started spending a lot of time on anti-vax websites and anti-vax Facebook groups to figure out what their models were that would draw people down, the rabbit hole algorithms on social media, and basically copied them, but with accurate medical information.
Can I just say, I mean, you talk about in 2010, he uploaded his first video to YouTube, and I'm reading from your story. But you talk about how he began to experiment rapping about ulcers and crooning ballads such as Pull and Pray, also the Safe Sex song, under his online moniker ZDoggMD. And he's got quite a following, right?
That's right, he does. So in the case of YouTube, that's tens of thousands of followers. In the case of Facebook, for example, that's 1.8 million followers. So he has accrued a huge following by basically parodying a number of very popular songs. I mean, one of those includes the Bruno Mars and Travie McCoy song Billionaire, which he rephrased as Immunize. And if you go check it out on YouTube, that's actually the first video he ever posted about vaccines. And, it drew a ton of encouragement from medical figures, who don't necessarily have the time or the energy or the creativity to do it themselves. It drew in a ton of disdain from the anti-vax movement. And what he realized is that he basically almost radicalized both sides of this, but it created such a massive surge in comments and views that YouTube, started to recommend the video to those who were searching for either vaccine or anti-vaccine terms. So the more adept he became at that, the more videos he started to produce. He's now produced about, I think, over 300. And here we are today with his latest one, Dan, which is set to Eminem Stan, all about anti-vaxxing.
I wonder, is he finding any friends within social media in that, we've seen Twitter and Facebook put disclaimers if they think the facts are wrong. Is that happening in the anti-vax space?
So it's interesting. He mentioned to me that he's having conversations with people that he says are the highest folk at YouTube and Facebook, and principally working in the healthcare information and misinformation space, and trying to find out how to combat disinformation online. So they are well aware of what it is that he does, and there's a small cohort that he's a part of, other sort of medical online influencers, like Dr. Mike being one of them. And I think that they're all having conversations, certainly with one another, but then some of them also with the social media companies to advise them on how to tackle what is really an outright lie when it comes to the anti-vax sentiment.
Yeah, and I do wonder, we just talked with Dr. Andy Pekosh over at Johns Hopkins, but the medical community has to be watching this so closely because we understand this whole idea that, the more that we can bring down the virus within communities, and I'm assuming that a vaccine is going to be obviously a big part of that. If there's a lot of people who opt out, that's going to be problematic going forward, Thomas.
Absolutely, that's going to be hugely problematic. I mean, already, we're seeing in the U.S. that vaccination rates are declining, in most states below the targeted 90%. Yeah. I think that, there are studies out, one out only just this week, in fact, a Gallup poll that says that about 35% of the U.S. population would refuse a vaccine mandated by the government, not mandated, but offered by the government at no cost to them whatsoever. And so that could become really quite difficult in terms of slowing the spread of this virus.
Yeah, it's really, really an important issue, and I'm glad that that's part of the coverage here in the magazine this week. Thomas, thank you so much. Thomas Buckley, he's Bloomberg News reporter, joining us on the phone from London. Be sure to check out that story and the whole issue that's online on newsstands and on the Bloomberg. For those of you listening in New York, D.C., and San Francisco and watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next, Alice, where'd that come from? Alex.
Same thing. It's real close.
Alex and I, we're talking eco on Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. We have got the Dow, the S&P at or near session lows. The Nasdaq Composite Index holding on to a gain barely. Right now, the S&P is down 13. That is a drop of 0.4%. The Dow is down 163 points now, down by 0.6%. Nasdaq holding on to a 10-point gain, little changed, up by less than 0.1%. Apple did help to push the Nasdaq Composite Index briefly past its record close. Cisco Systems is weighing on the Dow Jones Industrial Average. Right now, shares of Cisco trading lower by 11.6%. I mentioned Apple higher. Apple shares, they are advancing now by just about 1.34%. Investors continue to monitor the stimulus standoff in Washington. Two sides are said to be at least $1 trillion apart on another package of relief that the U.S. economy needs to overcome the ravages of the pandemic. Lisa Hornby is portfolio manager for U.S. fixed income at Schroeder Investment. She was interviewed this morning on Bloomberg Television.
Right now, the economy is surviving on stimulus. You think about some of the packages that are going to be rolling off, potentially the unemployment benefits. The question as to whether or not state and local governments get relief. I mean, these are some of the big economic questions we're asking ourselves. State and local governments employ 18 million people. Small businesses, right? They employ 60 million people.
The International Energy Agency has cut forecasts for global oil demand as air travel suffers from the coronavirus crisis even more than previously expected. The IEA reduced estimates for almost every quarter through to the end of 2021, with the second half of this year taking the steepest downgrades. West Texas Intermediate crude down 0.9%, $42.19 a barrel. Among some of the big oil names, ExxonMobil down 2.5%, BP down 2.1%, EOG Resources lower now by 3.2%, Pioneer Natural Resources down by 0.7%. Gold up 1.8%, $19.50 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
I'm Alex Steele, in for Jason Kelly. And in today's Business Week Economics, let's take a look at what is happening with the consumer. We have retail sales tomorrow, initial jobless claims coming in not as bad as expected, which I feel like is the theme for earnings as well as any eco data. Lindsay Pieg's chief economist over at Stifel Financial joins us now. Hey, Lindsay, help me understand how you interpreted the jobless claims. Like, in theory, it's good. Does it make D.C. less aggressive in acting?
Well, 963,000 people filed for unemployment insurance. So this is still an extraordinarily high number, but we have to put it in context of what we've seen over the past several months. And this is the first time that we've seen this fall below 1 million since early March. So it certainly is an improvement. Now, there is going to, looking at this morning's data, I should say, is going to fuel the argument or the conversation at the very least in Washington, because it is peculiar that we see this steep fall off coincide with an end to those very generous benefits. So some would argue that because the benefits were allowing people to receive their income, and in some cases beyond what they received prior to the pandemic, this was actually perpetuating an incentive to remain in a state of unemployment. And so now what we see is the unemployment benefits rolling away, and we also see claims coming down precipitously. Now, whether or not that remains to be true, we'll have to dig further into the details and at a very granular level. But that will certainly be one of the variables of conversation as we continue to see this stimulus debate in Washington.
I mean, Lindsay, it's still a really deep hole. And as our story and our write-through reminds us, the claims still remain above the highest point of the 2008 financial crisis. So, it's still pretty bad. And if, we know that there's still many Americans out of work, and we still are a little concerned about how those temporary job losses become permanent ones and stick with us for a while.
Absolutely. And the biggest concern, too, that I have is this second wave of layoffs that could be coming. Many businesses have been able to bridge the gap early on because of access to additional funds or PPP loans, et cetera. But now what we see is that the idea that once the economy reopened, we were going to skyrocket back to pre-pandemic levels, and this was going to be a one-stop shop in terms of the impact of the pandemic. Now we're seeing it's not quite that easy to contain this virus. And it's very likely that we do see additional flare-ups well into the end of the year, maybe even carrying into 2021. And so businesses are now going to be struggling to come up with a business plan to stay afloat, not just over a 1 month or 2 month period, but over a much longer term trajectory. And what we're seeing is many small businesses in particular are unable to do that. And we are seeing now permanent closures, permanent layoffs, and that could snowball into another large barrier into a labor market recovery.
So when do we start to feel the shift in government policy? Like, let's say with this, stimulus conversations pushed out till September. When do we start to see that in the data?
Well, it's going to be a little tricky because certainly what we saw is the stimulus is beginning to roll off, that we did see a decline in real per capita disposable income. But that's not the entire story, because if we actually see where we were prior to the pandemic, so looking back to February data, we're actually at a higher point. So the average American is actually better off from an income perspective relative to where they were in February. Where's all that funds? Where have all those monies gone? Well, in many cases, Americans have been saving a lot of that stimulus. Americans have saved roughly about $1.3 trillion in the past 3 months. So yes, there is pressure on Congress. Yes, there is pain still being felt out in the economy, but there's also a little bit of wiggle room. There's a little bit of a built-up wealth safety net by the American household that could bridge the gap during these talks and into towards the end of the year.
But Lindsay, is that buildup of wealth concentrated in a few hands, and that there are still, you know what I mean? We often talk about wealth concentration, and I do wonder when you say that, that Americans are building up. The statistics are showing that, kind of from the high vantage point, that a lot of Americans, though, don't have that kind of buildup. We've done the stories, right, that most Americans don't, or a big part of Americans don't even have enough money, if they have a $400 bill that comes in unexpectedly.
Absolutely. And in normal times, you're right, there is a large percentage of Americans that live paycheck to paycheck. But in this case, because the stimulus was actually not only replacing the paycheck, but actually giving an additional boost of that $600, many households actually were able to put some funds away, particularly as we saw some of the debt payments pushed forward. So Americans have been able to at least put a little bit in that piggy bank that can help bridge the gap for a short period of time. Certainly, we want Congress to come to an agreement and not remain in the deadlock, but at least there is that cushion to allow a little more negotiation time in D.C. before we see some sort of fiscal cliff for the American public.
What's the right number? What's the number that we need from D.C.?
Oh, that's beyond my pay grade. We'll leave that to the politicians and the voters. From an economist perspective, what we do want to be very careful of is, again, looking at that balance. We want to make sure that we help Americans during this very difficult time. Families are struggling to pay rent, to put food on the table, and we want to make sure that we provide for those individuals. But additional stimulus is very costly, and we do have to keep in mind the debt burden that we're putting on future generations going forward. And as I mentioned early on, we don't want to create a disincentive for people to go back to work, particularly in the hospitality industry. We've heard from a number of restaurants saying that it's been very difficult to reconnect with workers because of these very generous benefits. So again, we want to be able to get corporate America, small business America back online, put people back to work. It's a very fine line, very delicate balance that officials in Washington are going to try to walk.
But Lindsay, if you were going to the Hop Leaf Bar in Chicago, if it was opened and you were sitting down with a good friend and you had to pick a number, just got about 30 seconds, what would you say how much aid needs to come from Washington? Just quickly.
I think a package closer to the $1 trillion side of things is a more reasonable number that would help bridge the gap, but also not continue to perpetuate this ramp up in government debt.
All right, we're going to leave it on that note. Lindsay, thank you so much. Lindsay Pieggs, Chief Economist at Stifel Financial, joining us on the phone from Chicago. I mean, it's tricky, and I got to say, when it comes to aid, Alex, I've always felt, and Jason and I have talked about this, like if we overdo a little bit and people get a little bit extra money, I'm okay with it.
Yeah, and if you're a waiter, you usually make $100 a night. Are you making that? You're not.
Exactly. All right, let's go back to world and national news headlines. We did see some headlines crossing. Back over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol, President Trump is receiving credit today for a deal between Israel and the United Arab Emirates in which the two will establish diplomatic ties. Israeli Prime Minister Benjamin Netanyahu says it's the greatest advancement toward peace between Israel and the Arab world in 26 years.
I want to thank President Trump for his critical help in brokering this historic accord. And I want to thank him for his revolutionary vision for peace, which is the most realistic and important formula for peace in the region.
As part of the deal, Israel is also agreeing to suspend controversial moves to annex portions of the West Bank. Palestinian authorities are criticizing the deal, calling it treason, and asking for its retraction. Negotiations over a new virus relief package have all but ended with the White House and congressional leaders. They remain far apart on the size, the scope, and approach for shoring up households, reopening schools, and launching a national strategy to contain the virus. House Speaker Nancy Pelosi says the stalemate has been a long time coming.
It's no wonder we have a vast difference, because this administration and the Republicans in Congress have never understood the gravity of the situation. For months, and even until now, they have ignored the science.
President Trump is drawing a hard line in the latest talks. He says he will not allow any aid to go to the Postal Service to handle an influx of mail-in ballots. He continues to make an unsupported claim that more mail-in voting will lead to election fraud. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Alex Steele. This story you just brought to our attention, Alex, has to do with Bank of America, and they're going to extend backup child care payments for parents of children as old as 12 through the end of the year, and they're getting reimbursements of $75 to $100 depending on the workers' compensation. That's pretty remarkable.
Yeah, all I saw was B of A and backup childcare, and I was like, "Yep, that's what we're talking about." I find this really interesting too, because even if schools aren't open, then maybe you have the opportunity to hire a nanny, maybe, or someone to help your kid, or a private tutor to sort of monitor their time so you can go back to work. And I feel like what it also does is sort of the emerging conversation of work/life balance, which we know that there isn't any, but the idea that you can be a whole person and like you need help, where it used to just be something that we wouldn't talk about as
This
women.
sounds like from someone who knows.
Right. Now it feels like, A, we can talk about it, B, it's a male-female issue, and there's actual support. I think this is pretty awesome.
They apparently have already put out about $100 million in reimbursements, Bank of America, but it's really wild. There's no limit on the number of days employees can claim while they're working from home or in the office through December 31st. This was a memo that was put out to workers. But, man, when we talk about policies, we often talk about the U.S. being way behind when it comes to child care policy, especially as you often have families where both the husband and wife are working, or both spouses or both partners are working. This is a policy, you feel like there's a little bit of an evolution, and I guess ultimately the test will be, does it stick, Alex?
Yeah. Does it stick, and is there a stigma to it still or not? I guess is also a question. I think where this may get difficult, I mean, I'm speaking particularly in New York, is that a lot of the child care people may not be legal immigrants. So then you maybe can't get reimbursed, which gets tricky, and then it's a whole different bag of chips.
It's never easy. And apparently the bank's going to also add some more internal resources for parents, including tools to find childcare and also some webinars and virtual learning. So I got to give them some props. I'm just going to say.
Do it.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down Thursday, stocks are trading mixed. The Dow, the S&P lower, NASDAQ is higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a late fade here, helped by stimulus worries. Dow's currently down 100 points. S&P's drop 8. NASDAQ is still higher by 30. The U.S. 10-year yield jumps to 0.71%. WTI crude futures are down 1%. Gold is higher by 1.7%. And transports drop 75 points. Leaders to the upside in the Dow, Apple, Nike, and 3M, while Cisco and ExxonMobil led to the downside. Note that Cisco fell as much as 12% after earnings. That's the most since 2011. In other news, Apple set the size of its four-part bond offering at $5.5 billion, and Micron sees fiscal Q1 somewhat weaker than original views. Wrapping things up, some of the names reporting after the bell tonight include Applied Materials and Baidu. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so very much. I can't believe it, Carol. I have someone else in the studio with me.
I know, it's
weird.
like a party.
Yeah, I feel like it's a big party now. It's craziness. Joining us is Shonali Bassick. She has a great article out. She's been working her tail off this summer. It's called "The Age of the Everything Banker is Here. Get Ready for Odd Jobs." Shonali, when I did odd jobs, I mean, I was FedExing, I was faxing, I was photocopying. Like, that's what I did. Is this what we're talking about?
Not quite.
Okay, all right, just want to be clear.
In the banking industry, those jobs are being automated away. And what you have instead is these bankers. I've heard about bankers who are advising clients on how to address racial tensions, for example, and how to donate to the right places. You wouldn't think that's a banker's job. And I've heard of one banker who advises sovereign governments, having to advise them on face masks.
What?
If you're a banker, you just have to be kind of the conciliatory to your clients. Like, you just have to pull up your sleeves and do what they ask these days, I guess.
Well, what's going on, Shonali?
So this reminds a lot of bankers of what it used to be like, right? The great bankers of the past used to be an advisor to the CEOs of many corporations. They weren't just arranging deals or arranging debt and having a million bankers on the deal lists that they are on or on the league tables. So with this belt-tightening era, people don't want to pay a lot for investment bankers, number one. They want to have one or two that they can trust. It tends to be the top three banks these days, but there are a lot of boutique banks. And, we just came off of a major M&A boom. That can't continue.
Can I ask a dumb question? So, I mean, if I'm a client, what's my loyalty with a bank? Like, how deep does that run? Like, do I use, like, Credit Suisse for SPACs, and then I use, like, Goldman for trading? Like, do I do that?
Funny you ask that, because Credit Suisse is actually a big SPAC bank, and they are known to do that well. But for everything else, you would prefer that your banker could do everything, partially because you don't need to pay as much if you're hiring 7 banks. But you want them to be able to say, hey, we think an activist is going to get in your stock. You need to do this, and this is how you defend yourself. Or, hey, your stock is outside of your peer base. This is what you may want to do to fix that. Or, hey, you're like, the racial tension one, I think, is one of the more interesting things, because that's so far afield from what you think a bank would do. But how do you make yourself better positioned for tomorrow is the main question to answer.
Well, and it's about maintaining relationships, right? So, okay, maybe if, they're not doing traditional banking, responsibilities and activities right now, Shonali, it doesn't mean there's not another upcycle around the bend, right? When things start to recover. And so you just want to make sure you maintain as many relationships, especially those important ones and those lucrative ones, with your banking clients.
That's right. And I think part of the reason things have changed so much over time is if you think about the last 5 years, when you had younger bankers, they were jumping out of their seats to go work in private equity or work at corporations. And so it's not like you have this next generation of bankers that started on the ground floor of Goldman and then rose all the way to the top. You have some of those, but it's not like the whole industry looks like that anymore.
I also wonder, too, we talk a lot about bankers not getting paid the right kind of bonuses and then moving to the buy side. And I wonder if if you get really good at this, if you become more valuable, and what that, like the key man risk situation.
That's a real thing, and something you and I talked about a little bit yesterday. It's a down year for mergers and acquisitions. So banks are in a tough time this year where they have to say, okay, we need to look at who the best of the best is and make sure that they get paid well this year anyways. Everybody else don't know what to say, but the best of the best,
But
they
shouldn't
will
it be
try.
like that every year? Like, I don't understand.
Well,
Why
I mean,
is that
it's
different?
not the case, right?
If we're not performing well this year, right? If you're not, you could generally be expecting to be paid lower. But to retain those best people, they're going to try to give them a sweetener anyways, is what we're hearing, so that they feel good about being there even at a tough time.
I do wonder too, Shonali, if we're creating though a new generation of bankers that, you know, going forward will just be doing more things and not just traditional banking things.
That's for sure. There's a debate I've found through this story. Not all of the bankers I spoke to agree with the types of skills that you need for the future. So there are a few firms I talked to that strongly believe you need to be a quant and have technology skills to be a good banker. There are other bankers that think a quant is not the same thing as an investment banker. Fundamentally, the personalities are different, the skills are different. So there's no consensus.
Can we ask her too about that other story that was on the Bloomberg about big banks hiring 19,000?
Yeah.
What's up with that?
So another thing is that banks have been hiring in a tough time to be, the best of the best have been hiring to be defensive and capitalize on this. There are some businesses that are booming right now, mortgage refinancing being one of them, for example. I think one of the things that scares everybody about that boom in headcount is whether it's a sustainable boom in headcount. Doesn't mean that those are people that they will keep around when things get tougher. Remember, things have been propped up a lot by the Fed right now.
Interesting. Yeah.
She says,
Interesting.
No, but I mean, like, you know, we talked about at the top of the show, the world continues to pivot as a result of the pandemic, as a result of things slowing down, the recession. You know, it's just, we're all trying to figure out how to make our way through, Shonali, right? That's ultimately what it's about.
And they could both win. They could both be right. You're just going to have winners and losers on both sides.
Exactly. And, you know, the question, too, is there's so much money, just so much money flushing into fintech. And so you've got to wonder whether traditional banking is where these folks want to stay anyways.
Yeah, right. Exactly. All right. Great stuff, as always. And as you said, I don't think Shonali gets any sleep, Alex.
No, she really
she's
doesn't.
working nonstop.
Yeah. No, I swear to God, she really doesn't.
All right, Shonali Bosick. She's Wall Street reporter at Bloomberg News in our Bloomberg Interactive Brokers studio. Check her out at Shonali Bosick on Twitter. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week, and I think it's safe to say that it's Alex Steele's favorite time of our program.
Can I just tell you how stressed I get?
Do you really?
Yeah, no, for real. My stomach.
You stress about a lot. I love you to death, but you know,
Me?
this is
No, what are you talking about?
This is supposed to be fun. We're going to get to the chart of the day. We're going to get to Dave Wilson, and you know what that means. A song is coming up, so stick around for that in just a moment. Let's get back to your top business stories and another check-in with Charlie.
All
Pellet.
right, I thank you very much, Carol Masser, and here's what's going on. 28 minutes to go ahead of the close. Equities pulling back from the cusp of records as investors mull the stalemate in stimulus negotiations, along with signs of an economic recovery. Treasury yields up for a fifth day. Crude oil decline. Let's begin with crude. West Texas Intermediate down 0.7%, 42.37 a barrel. Gold up 1.6%, 19.46 the ounce, higher by $31 the ounce on the precious metal. We've got the 10-year down 8.30 seconds. The yield creeping up to 0.71%. Stocks mixed. NASDAQ holding on to a gain here, up 41 points, up by about 0.4%. The S&P is lower, down 4 points now, down 0.1%. It's been a choppy session. The Dow down 70, a drop there of just about 0.3%. Cisco Systems down 11.5% after the company last night gave a lackluster sales forecast, signaling that businesses are spending less in the pandemic-driven recession. After the bell, a couple of reports to look out for. Applied Materials shares now down by 1.8%. Baidu lower now by 1.2%. 3:32 on Wall Street. Time now for the Small Business Report, and here's John Tucker.
Eric Brun credits the Paycheck Protection Program with saving his small business. He owns SoCo Creamery. This is an ice cream shop and wholesale supplier in Great Barrington, Massachusetts. When we first touched base in April, sales were down 60%. The wholesale business was virtually gone. Well, Eric rejoins us this morning. Describe the experience you had with the government aid, if you would.
We received the Paycheck Protection loan late, but in a timely enough manner so that it helped enormously for us. The store has been down from last year, maybe 20%, but certainly enough so that we're getting to the end of the summer in reasonable shape.
It's worked out well. You're grateful for it. Is it enough to sustain you going into what could be a slower season in the fall and the winter?
I'll just say I hope so. It's not like we're ending the summer with a pile of cash.
Just how important is the government stimulus to you and your business?
We were able to keep people employed so that when summer arrived, we could be a business. So it really served the express purpose. And on the demand side, I think that there are a lot of people out there who have been given life support over the last 4 to 5 months. If that comes to an end, some people will just not make it.
That's Eric Brun, owner of SoCo Creamery in Great Barrington, Massachusetts. Thanks and best of luck. And that is your Bloomberg Small Business Report for today.
And we thank you, John Tucker, again, recapping equities trading mixed. S&P down by 5. That's a drop of less than 0.2%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
Yes, indeed. Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Masser, Alex Steele, and this is Bloomberg.
No, I know. Is it Barnes Courtney? No, I don't know. I have no idea. I literally was trying to Google
I am so crushed.
Oh, God, she's actually crying. She's almost crying, you guys.
Stairway to Heaven, Led Zeppelin. And let me just tell everybody, Dave Wilson, come in here. If you have not seen the Kennedy Center Honors, which you should watch, Alex, because you would love, because they often feature folks from Broadway. They do it every year in December. They honored Led Zeppelin a few years ago, and Heart did a rendition of this that is to die for.
Absolutely.
Right, Dave?
Yes.
Alex, We're going to have to do, maybe we could do a little online musical education course for Alex.
You're not alone at all. My husband's been trying to do this. So he turns me for pop culture. He's like, oh, it's because you're younger than me. And I'm like, no, it's because I know nothing, Jon Snow. I literally, it's not a thing. I'm not faking it.
I mean, this was all part of my thought process, to be honest. I mean, I figured at the very least, Alex should know this song, because if you were to write, you know, a sort of a history of music and songs that you would need to know just to understand what music was all about over the past 60, 70 years, Stairway to Heaven would definitely be on that list.
I just want you to know, Alex Steele and Dave Wilson, that I'm getting emails in, or people are like, really? She
That
doesn't
happened
know
to me
this
the other
song?
day. People were like, that wasn't real, right? You were totally kidding. And I was like, no, I wasn't.
It's also worth just even like Googling the lyrics to read, because they're just wild. Right, Dave?
Oh, yeah, and the instrumental.
Incredible.
I mean, absolutely. But it's all about gold. I mean, that's what the chart is. You know, the lady who's sure all that glitters is gold. Well, okay, gold hasn't exactly been glittering if you look at the valuation of gold stocks. Now, we know the precious metal got above $2,000 an ounce not long ago. It's backed off. It's still, you know, up quite a bit over the past year or so. Well, you're not seeing that show up in the valuation of gold mining stocks. And, you know, I got clued into this because I was looking at a report yesterday from Andrew Garthwaite, who's a global strategist at Credit Suisse. Now, he was focusing on the dollar, but of course, if you're talking about the dollar, you can't help but at least flick at what's happening with gold. And so what I did to try and get a sense of history here is look at an indicator called the FTSE Gold Mines Index. So you're talking about companies worldwide that get more than half their revenue from gold. And I compared the forward price earnings ratio. So you're looking at projected profit for the next 12 months. That's what Garthwaite used. And did that relative to the FTSE All World Index, which is a pretty broad benchmark like the MSCI All Country World and some other indicators that track developed and emerging markets. And so when you run the numbers, you find out that gold mining stocks are actually cheaper than stocks more broadly, to the tune of about a 16% discount. And you don't have to go back far to June when you saw that discount reach 19%. That was the widest since July 2013. So gold may be running up, but it's not like people are figuring that gold mining companies are that much more valuable. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's official. Twitter has crashed. Everybody's been downloading and retweeting and mentioning my tweet on Alex Steele and Stairway to Heaven. No, I'm just
oh, God. You tweeted about
I did not. I did not. Although I might. I just might on that one. Listen, fingers crossed that eventually a Broadway tune will come your way.
Hey, I got yesterday's. Let's not forget Madonna. Crazy for you.
So Madonna and Broadway. Wow.
God, I'm so pathetic.
It's hard.
I should go home and nurse my wounds now.
I do not know a lot of Broadway songs.
I guess that. Okay, well, we can, debate that.
All right. Dave Wilson will be back a little bit later on. Let's get back to World and National News headlines and Nancy Lyons. Hi, Nancy.
Hey, Carol. President Trump says funds to shore up the U.S. Postal Service ahead of the election are a key sticking point in stalled coronavirus relief talks with Democrats. Bloomberg's Nathan Hager reports.
In an interview with Fox Business, the president says Republicans have common ground with Democrats when it comes to funding for schools and virus testing, but not for the Postal Service.
Now, they need that money in order to have the post office work so it can take all of these millions and millions of ballots. Now, in the meantime, they aren't getting there. By the way, those are just two items. But if they don't get those two items, that means you can't have universal mail-in voting.
In her latest update on the negotiations, House Speaker Nancy Pelosi says Republicans are obsessed with undermining the Postal Service. Nathan Hager, Bloomberg Radio.
Israel is hailing a U.S.-brokered peace deal with the United Arab Emirates as a great day for peace. Jared Kushner, a senior advisor to President Trump, says the two nations will now normalize diplomatic relations.
This is a really great step forward for the region, a great step forward for the country, and a great step forward for the world.
Palestinians are calling the deal treason and recalling their ambassador from the UAE. The Justice Department says it has dismantled the cyber financing campaigns for 3 terrorist organizations. Officials say they seized millions of dollars from hundreds of accounts, 4 websites, and 4 Facebook pages that Hamas, Al-Qaeda, and the Islamic State were using to solicit funds. TikTok and its U.S. employees are planning to take the Trump administration to court over a sweeping order that could ban the popular video app. That's the word from an attorney preparing one of the lawsuits. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right. Thank you so much, Nancy. You're listening to Bloomberg Business Week. Carol Master along with Alex Steele. She's in for Jason Kelly this week. An interesting story by Sally Bakewell on the Bloomberg, important story about how much of America shut out of the greatest borrowing binge. And so we're talking about government stimulus has allowed more companies to borrow at lower rates than ever before, yet amid this credit boom, smaller firms that, as we know, Alex, we talk all about it, about small businesses, how important they are to the U.S. and American economy, that those smaller firms are often being shut out. And so you do wonder about what's the implications, right, for the economic recovery.
Yeah, and there's a couple sides to that. I mean, one is the corporate bond buying plan from the Fed didn't help those companies that don't have access to the corporate bond market. So number one, you may have, record low yields in IG and high yield, but that's not going to necessarily do anything for you. Also, you're seeing in SLOOS, I love SLOOS, it's a senior loan officer survey, and they say that about 70% of banks say that they've been tightening their lending standards for small commercial industrial firms in the third quarter. You can't blame them. But how do you loosen that up? I mean, because the more risk they take on, the more capital they have to keep on their books in order to protect against losses. So if they don't want to do that, then they can't lend to those riskier businesses.
And I'm just going to say, this is why we love you, because you know about SLOOS, but you don't know about Stairway to Heaven.
See,
it's just
I have my value. You just have to know what it is.
Exactly. You have lots of value, but that's why we love it. But you do wonder about, and we've been watching those bankruptcy levels a lot, especially for kind of the smaller and medium-sized firms, to see, those, I feel like, so often those businesses, when you talk to heads of those kinds of companies, they're always kind of living on the edge, in terms of, meeting their bills and the money coming in. It's not an easy lifestyle. And so you do wonder, the harder it gets, whether we're going to start to see more bankruptcies.
Yeah, and I wonder how much this leaves on the edge of direct lenders, because they're the ones that usually provide financing to small and mid-sized firms, but they're also retrenching. And then where's the risk then move to?
So she knows SLOOS, but not Led Zeppelin. It's okay. It's all good, everyone. It's all good. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ is moving higher. NASDAQ climbing that stairway to heaven, but no record 11,108. That was the record 1 week ago today. Right now, we've got NASDAQ at 11,039, up 27 points, a gain of about 0.3%. S&P down 9, lower by 0.3. The Dow down 116, a drop there of 0.4. 10-year yield 0.71%. We've got gold up 1.8%, 19.49 the ounce. West Texas Intermediate crude down 0.8%, 42.34 a barrel. After the bell, Applied Materials shares now lower ahead of that report by 2.1%, and Baidu shares they are down by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. Just about 11 minutes left in today's trading session. It is time for the drive to the close. Back with us, Alan Zafran, founding partner and co-CEO at IEQ Capital. He joins us once again on the phone from Foster City, California. Alan, nice to have you here with Alex and me. So talk to us a little bit about this environment, because from what I understand from your notes, you see the global economy starting to show some signs of, at least early signs of recovery. Talk to us about that, what kind of recovery and what that means to the financial markets, the equity markets, and kind of how much is priced in already.
Alex and Carol, I hate to say it this way, a lot of it is priced in because stocks are front running, but you can see it. You can see that the jobless claims are coming down. You can see that the stimulus has gone into the economy. It's showing up right into the markets right now. You can see the fact that PMIs are kicking up globally. You can see the fact that high-yield bond issuance is going to reach a record level this calendar year. Imagine that. Couldn't have imagined that back in March. So whether or not we think it was prudent from a long-term perspective, all the liquidity coming in, both from fiscal stimulus and monetary stimulus, is leading to an improvement, at least in the markets and economically. The challenge we're going to have is the data is going to look very robust in the third quarter off of an exceptionally depressed level. But you still have an incredibly large number of unemployed people and a significant number of people living at or near the poverty line. And so the inequity that we had before we got into this mess has only gotten worse. And that is the challenge for the 12 months looking forward.
So then what do you make of the 10-year Treasury at 71 basis points?
It's term premium. You know, at some point people want to get a little higher return for the fact they're locking up their money for so long, but it's not signaling that inflation is materially running amok. In fact, far from it. You can see that there's a little bit of a pickup in the last 2 weeks for value-oriented stocks. The yield's going up a little bit. It's picking up on the fact that the economy on the margin is strengthening a bit, and the stock market is seeing a bit of a broadening and participation of stocks going up. Economically sensitive sectors are performing a little better in the last 2 weeks, but again, off of a depressed base. It's nice to see we're going to have some growth. We're not going to go into a deflationary spiral, which would be horrible. It doesn't mean that we're going to have significant, robust secular growth. We're not there. We're not going to be there for quite a while.
Where would you put new money?
You've got to spread it out. You can't put it all in one place. There are too many unknowns. What seems pretty evident is a lot of the money has gone into stocks, and because the reality is, do I really want, if I'm a long-term institution, how exciting is it to earn 0.7% for the next 10 years? It's just not compelling. Even if I'm a taxable individual, a municipal bond is less than 1% for 10 years. So it doesn't take rocket science to figure out when 95% of stocks in the S&P 500 with a dividend give me a higher yield than a treasury bond. Stocks seem like a pretty good bet, but you don't want to put all your eggs in one basket. There's a lot that could happen that could cause problems. So you got to spread it out. You got to have some bonds. You might want to have a little cash for rainy days and holidays as well.
Well, yeah, I was going to say, where do you put the eggs? Like, how much of your eggs are in cash? How much of your eggs are maybe in some high yield bonds? How much of your eggs are in gold? How much of your eggs are in eggs?
Fair question. Fair question. Well, the answer is you got to know your own sleep quotient, which means you got to only put enough stocks in so you can go to sleep at night, and that's a different answer for everybody. What I would tell you is this: if you're a long-term investor, your ability to time the market is almost as bad as mine. I'm a terrible market timer. What I do know is, by and large, holding equities through thick and thin, if you have the risk tolerance and the time horizon, you win. And I think one of the lessons from this March, which was horrific, was people realized if they had sold towards the bottom, it was a mistake. That, in effect, is going to give somewhat of a floor going forward, that people will be reticent to sell as quickly whenever a second wave may or may not come from this virus or other events that will happen. They'll recognize that selling in a panic is probably the wrong thing to do if you're a long-term investor. And I think, therefore, we're unlikely to see the kind of unwinding like we saw last March. You'll still see points of weakness, but I don't think you're going to see the crazy volatility, sharp downside we saw 5 months ago.
All right, but Alan, don't hate me for this, but I feel like the longer I do this and watch market cycles, and particularly I feel like in the last 10, 20 years and watching various crises, that when things really come undone, we know the Fed will be there, to rescue everybody. And I do feel like, we've seen, like, you can really kind of see when the market gets overvalued and then we have a correction, or we have the market gets overvalued and there's a crisis and then there's assistance. Like, I do feel like the market is becoming easier and easier to call. Maybe I'm just being naive, but I feel like you really can see some of these cycles pretty clearly.
Whereas I agree with you, let me posit a different possibility that going forward, we're going to live in a world of lower rates of return. And you're going to find it's not going to be, it may be the same playbook, but the reward is going to be less attractive. By definition, it used to get 5% a year to buy a long-term bond. Now you're getting 0.7%. If your starting point is 20-something times earnings, and you're going to end at 16 times earnings, you might make some money, but the compression on that multiple will reduce your rate of return. And part of where that you're going to lose, we have to pay for this virus.
Yeah.
What you're going to see is tax rates going up under almost any regime, both state and federal. You're already seeing that in New York and in California. There's millionaires' taxes. You're going to see corporate tax rates go up. You're going to see local assessments go up. All of that's going to pull some spending going forward, and in turn will mitigate some amount of economic growth, and that will eventually show up in slightly slower earnings growth. I didn't say negative, but it takes from the return. So whereas I think you're right, markets keep getting bailed out, I'm not sure the reward will be quite as robust as it was in the past. It still means you should be in there for the long run, but your return might be a little bit disappointing.
Do you have to buy tech then? We only have like 45 seconds left.
Great question.
You need to buy tech for two reasons. Well, three reasons. One is it's dominating the market. Tech and communications, if you throw in Google and Facebook, is 40% of the S&P 500. You have no choice. Two, in a world of low growth, people pay a premium for the companies that can grow. That's tech. And thirdly, you want to be balanced. So whereas you certainly want to have some value stock, growth are absolutely the central integral part of the markets. So you have to have some exposure to tech.
Well, there you have it. Good stuff. Alan, always love catching up with you. Alan Safran, he's a regular for us. He's founding partner and co-CEO at IEQ Capital, on the phone from Foster City, California. Alex, I know you're not supposed to time the market, but do you know what I mean? Like, I feel like cycles are getting clearer. I don't know. Maybe I'm just crazy.
Oh, I'm definitely not timing any market. If I say something, you should do the absolute opposite. That is 100% what should happen. But to your point of, like, the Fed will step in, I think that's real, because there is a 360 here, right? Like, if I see the stock market drop, I get scared, I save, I don't spend, and then that actually impacts real economic growth. So there is a reason to support the market.
Yeah, exactly. All right, good stuff. Folks, we've got a few minutes left in today's trading day, just about 3.5. We'll catch you down to the closing bell. Take a look at those movers and shakers on this Thursday. This is...
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange. Folks from NetStreet virtually ringing that closing bell. Mixed day, down day for the S&P, down day for the Dow, and an up day for the NASDAQ Composite Index. Equities pulled back from the cusp of records as investors mull the stalemate in stimulus negotiations, along with signs of an economic recovery. Treasury yields rose for a fifth day. Crude oil declined. The 10-year down 8/32. The yield now at 0.71%. Crude West Texas Intermediate down 0.8%, lower by 34 cents a barrel, 42.33. Gold up 1.9%, now at $19.51 the ounce, up almost $36 the ounce. S&P down 6, a drop of 0.2%. Again, the Dow down 79, down 0.3. NASDAQ up 30, that was a gain of 0.3%. As for where to put new money to work, Alan Zaffern is co-CEO at IEQ Capital. He was our guest moments ago, right here on Bloomberg Business Week.
What seems pretty evident is a lot of the money has gone into stocks, and because the reality is, do I really want, if I'm a long-term institution, how exciting is it to earn 0.7% for the next 10 years? It's just not compelling. Even if I'm a taxable individual, a municipal bond is less than 1% for 10 years. So it doesn't take rocket science to figure out when 95% of stocks in the S&P 500 with a dividend give me a higher yield than a treasury bond. Stocks seem like a pretty good bet.
Apple has removed Fortnite from the App Store hours after the game's creator Epic Games Inc. outlined a new payment plan in violation of Apple rules. Apple shares did advance today, up by 1.8%. Cisco Systems shares tumbled after the company gave a lackluster sales forecast, signaling that businesses are spending less in the pandemic-driven recession. AMC Theater shares surged. It will reopen in the U.S. on August 20th with retro ticket prices of 15 cents a movie. Recapping, stocks mixed. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Move around. Motion creates emotion.
I feel the earth move under my feet.
You move like they do. I've never seen anyone move that fast.
Shake. All right, people, let's move like we've got a purpose.
Something's called movers and shakers. They cost a little more, but that name cracked me up.
Bloomberg Business Week. Movers and Shakers with Carol Messer and Jason Kelly on Bloomberg Radio.
Yes, indeed. Time to take a look at some of the stocks on the move on this Thursday. Carol Master along with Alex Steele. Jason Kelly is out this week. And I'm going to go right to some earnings because AMAT is out with their results and the stock is moving higher in the after hours. Applied Materials, third quarter adjusted EPS of $1.06 a share. That is 11 cents better than what Wall Street was forecasting. Third quarter net sales of $4.4 billion. That too is a beat. The forecast was for $4.18 billion. And the company also talking about the fourth quarter. So a little bit of a forecast here. They see fourth quarter adjusted EPS, Alex, of $1.11 to $1.23 a share. That is higher than the Wall Street estimate of $1.02, and their fourth quarter net sales are looking for $4.4 billion to $4.8 billion. That too is better than the forecast that is out there, which is about $4.36 billion. So again, that stock already on the move in the after hours. We've been talking a lot about these chip stocks. It's up about 1.25%, and a quick check stock is up about 6.6% this year. So we've been talking a lot about the chip sector as they've been reporting.
Yeah, I'm trying to find out why the stock is down 1%. I mean, it may be just a regular, it's run kind of thing. I mean, NVIDIA is one of the best performing stocks, right? You're basically looking at Applied Materials, which is almost back to the level that it was in March before everything fell out of bed. So that could be it. But
Matt, you're talking about why it's up?
I have it down. Did I have it down in post?
I have it up about 1%.
Oh. I have to look at my terminal. I have it down 1.3. This never happens. Anywho, same point.
Moving along.
It's still been up. It's still almost at the highest levels since March. So I mean, it's already had the run, but it feels like this is definitely the sector where you can get the most bang for your buck. Except the fact that like Micron, for example.
Yeah, I mean, but it's just interesting to kind of watch where these stocks, how they're coming in. Quick check on the S&P 500. Let's just do big picture for a moment, if we may. 175 names higher today, 329 lower, one unchanged. So definitely much more of a bearish tone to the trade today, and we saw that too when you look at the major equity averages. So yeah, you know, not as all in. Your brow is furrowed. I can see that on Nexi.
Oh, yeah. Oh, sorry. Yeah, I'm just trying to figure out why my pricing is different for Applied Materials. I hate when this happens. I get so used to doing different screens. Anyway, moving on to other stocks. Also taking a look at Uber and Lyft also is something that we're looking at.
Yes.
Looking ahead not only to what's going to be happening in California in terms of their drivers, but Lyft earnings out yesterday. It was bad, maybe not as bad as we thought, which is totally the common theme. But it really does hinge now on regulatory issues, the same way that Uber's up against basically all of London come September 12th. It's going to live or die by that.
Right, exactly. I mean, these are big, and we were talking about this certainly yesterday after the closing bell because we, of course, as Lyft reported. So quick check on those stocks in terms of how they ended the day, because they did definitely, I mean, it was an overall lower market for many, many names, but let's just take a look. Lyft was down 5.4%. Sorry, we're both like having, I don't know, there must be something technologically going on right now. Lyft is down 5.4% at the close today. And a quick check on Uber. Of course, not apples to apples, but nonetheless, we do like to take a look at Uber in terms of how it did as Lyft traded lower. It too was down, but not as much, just down about 1.25%.
But to your point in terms of the markets, by the way, I mean, I feel like the real story today was what happened with yields. You had that 30-year bond offering. The demand really wasn't there. It's just, I feel like it's a simple story of there's just too much supply. There wasn't enough demand today, but you did have a steeper curve. It was a lot of bear steepening. I mean, 71 basis points doesn't sound like a lot, but it is for where we were.
And get ready for more supply, right?
Oh, yeah. I mean that's what we saw
more.
this week. Like, you had some takedown, but at some point you just ran out of juice for it.
Yeah, exactly. At some point, you do wonder about, it goes back to just basic supply and demand. If the investors aren't interested in the issues, we're going to see that play out. Cisco? Want to talk Cisco?
Let's talk Cisco.
Did we talk Cisco? We didn't.
No, but it was bad yesterday, and now it's just still bad.
It's still bad. Yeah, that's for sure. I mean, the stock, I think it is, let me just take a quick check, ended down about 11%.
Yeah.
And
it's the weak forecast.
Yeah, totally, right? It's not what you want to hear. Certainly if you're an investor in that name. Cisco was the #1 decliner in the S&P. All right, quick check on the volatility index report on this Thursday. And the VIX, it closed, call it little change, a little bit higher, closing at 22.3. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson! Hey, Mr. Wilson, come on in. Dave Wilson, Bloomberg Stocks editor with his stock of the day. What do you got, Dave?
Aspen Technology, Carol. It's a maker of what the company calls asset optimization software. Companies in the energy, chemical, and engineering industries use the programs to track assets and to get the most out of them. Aspen Technology grew out of research done at MIT in the 1970s. The company was founded in 1982 and went public in 1994. The ticker is AZPN. Aspen Technology shares have risen almost every year since 2009. This year, they set a record in January and fell as much as 49% through March. Aspen Technology went a long way toward recouping the loss after putting out fiscal fourth quarter results late yesterday. Earnings and revenue beat analyst average estimates in a Bloomberg survey after coming up short for 2 quarters in a row. Forecasts for the current fiscal year also surpassed projections. Now, the results and outlook sent Aspen Technology to its biggest gain since October 2002. The shares rose more than 29%.
All right, good stuff. Hey, Dave Wilson, quick question. So GIPO versus GIP all. Better trade for after hours. Should we do GIP all?
Whatever works.
No,
They're different.
But we're getting different trades.
I do GIP post. Is that bad news bears?
You know, I'll have to take a closer look.
Okay, you're going to get back to us because I do GIPO often for the after hours trade, and we're definitely getting different reads. So we want to make sure we're putting out the best information.
We just went down the dark hole. We just spiraled down that in a big way.
It's so true. We're back and forth. All right, Dave Wilson, good stuff with his stock of the day. We really appreciate it. All right, let's get to world and national news headlines. For that, let's turn things over to Mark Mills. He is in our Bloomberg newsroom. Hi, Mark.
Hi, Carol. Thanks. Israel and the United Arab Emirates reached an agreement to work toward fully normalized relations, a potentially historic breakthrough that President Donald Trump said will facilitate peace in the Mideast. The UAE would join Egypt and Jordan as the only Arab countries with normal ties with Israel. As part of the deal, Israel agreed to suspend controversial moves to annex portions of the West Bank. President Trump said the agreement could lead to more diplomatic breakthroughs.
Now that the ice has been broken, I expect more Arab and Muslim countries will follow the United Arab Emirates lead.
House Speaker Nancy Pelosi and the Trump administration are nowhere near making a deal on the next round of coronavirus relief. The two sides are at least $1 trillion apart on what is needed to overcome the ravages of a pandemic that continues to force companies, schools, and other organizations to roll back plans to reopen for business. Pelosi said the Republicans just don't grasp the depth of the problem.
This administration and the Republicans in Congress have never understood the gravity of the situation.
Appearing on the Fox Business Network, Treasury Secretary Steve Mnuchin defended the White House position, saying the Democrats don't think the economy is going to open up, and we do. Manhattan apartment rents plunged last month by the most in nearly 9 years by almost every measure. The news is dismal for landlords who are trying to keep units filled during the pandemic that sparked an urban exodus. The median rent plummeted 10% to $3,167, the biggest rate of decline on records dating back to October 2011. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. Carol Master along with Alex Steele. And I got to say, this is a story I talked about a little bit with Doug Krisner yesterday of Daybreak Asia. And this whole idea that when the president potentially makes a move or takes a move against a foreign company and you think you're just exclusively hurting the foreign company, that's not necessarily the case, Alex.
No, this was super fascinating. And basically, if you take a look at, say, WeChat, for example, what would you choose? Like, if WeChat is banned from an iPhone, would you choose your iPhone or would you go to a different device that has WeChat? And a lot of people surveyed said that they ditched their iPhone because they need WeChat because it has everything from like fintech to call servicing, like it's everything. But I guess the question is, where do you get that device? Because you can go to, say, the Google phone, but like maybe that's the same problem. So then you have to go to a local or homegrown phone in China to do that. And that sort of ripple effect is really fascinating.
So check this out. One analyst at TF International Securities, they said if Apple was forced to remove the service from its global app stores, iPhone annual shipments would decline 25 to 30%, while other hardware, including AirPods, iPads, Apple Watches, and Mac computers may fall 15 to 25%. So Apple has spent so much time building up this Chinese market, right? And as there has been increased competition there, and we're talking about, it's now about a $44 billion growth driver for Apple. So that's at risk potentially.
Yeah, and that would be huge for them. I mean, they had to fend off Xiaomi with their lower priced phones in China as well. And they really need to get new people buying phones because the upgrade cycle is lasting longer and longer. So they don't get that juicy pop. I also find interesting too, in terms of Apple suppliers are dealing now with, I'm going to have one business in China for Chinese companies and one business outside China for Apple.
Yeah.
So it's like you've two tech stories, basically.
It's a huge, huge story, and it's something that we're going to talk about a little bit more because we're going to catch up with Mark Gurman. He is really our top-notch Apple watcher here at Bloomberg News, so we're going to get to him in just a moment. That's still to come right here on Bloomberg Business Week on Bloomberg Radio. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on Applied Materials shares after hours. They're up now by about 1.3%. Third quarter net sales, $4.40 billion. Estimates, $4.12 billion. Third quarter adjusted EPS coming in at $1.06. Estimates there were for 90 cents. But again, Applied Materials, AMAT on the ticker, are moving higher now by about 1.3%. Applied also says it sees fourth quarter net sales in the range of $4.4 to $4.8 billion. Estimates have been for $4.36 billion. Turned out to be a mixed day for the U.S. stock market today. S&P 500 index down 6. That was a drop of just about 0.2%. Dow Jones Industrial Average down 80, a decline today of about 0.3%. And NASDAQ holding on to a 30-point gain up today by about 0.3%. Equities pulling back from the cusp of records as investors mulled the stalemate in stimulus negotiations, along with signs of an economic recovery. Treasury yields higher for a fifth day. 10-year yield 0.71%. Gold up 1.8%, $19.51 the ounce. And West Texas Intermediate crude down about 0.8%, $42.35 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this story, Alex, I know it's caught both of our attentions. It's, I think, still our most read story in the Bloomberg in the past 8 hours. It's about Apple readying a series of bundles that will let customers subscribe to several of the company's digital services at a lower monthly price. This scoop from our really crack Apple watcher. We're talking about Mark Gurman. He's Bloomberg News technology reporter joining us on the phone from Los Angeles. Hey, Mark, so what's going on?
Yeah, thank you for having me. Apple, like you said, is preparing a series of bundles for their services now. What that means is instead of subscribing to each of Apple's services a la carte and paying whatever it's $4.99 or $9.99 or $14.99, you'll be able to buy a bunch for one price and one lower discounted price that's designed to save consumers upwards of $5 per month if they subscribe to multiple services. Very similar to what Amazon does with Prime, where you could subscribe to basically all of their digital stuff for one fee a year.
And is it just like Apple stuff? It's not like CBS or some other app?
So there's a few bundles. The one in the story we're talking about is for Apple services. So this would combine Apple Music, Apple TV Plus. This would also include Apple News Plus. It would include Apple Arcade. It would include iCloud storage and a new workouts fitness app that they're working on that is similar to what Peloton and Nike offers. So that's going to be called One Apple, right? Then there's another one called, well, this one actually doesn't have a name. There's another one that bundles together CBS All Access with Showtime if you subscribe to Apple TV Plus. So you'll be able to save $10 a month on those. That launches on Monday, we're told.
So what is it? Apple becoming a cable provider?
Well, there's a few things going on here. One, this second bundle where they bundle together CBS All Access with Showtime and Apple TV Plus is basically a discount rate to what they've already sold. So last year they launched something called Apple TV Channels, which basically lets you to subscribe a la carte to, I believe there's upwards of 10 or 15 different channels you can add to Apple TV Plus. The new thing here is they're going to start bundling together CBS All Access and Showtime. So right now, CBS All Access is $10 a month. Showtime is $11 a month. Now, if you pay $5 a month to TV Plus, you'll be able to get both together for an extra $10 a month.
But you know what
that's a lot.
But Mark, you know what I'm asking? This whole idea of this bundling, like, platform that I feel like cable was kind of getting away from, but now I feel like we're moving back towards it. In many ways, whether it's in the streaming world or whether it's, you know, from the Apple community.
Yeah, and Apple's doing it because investors and analysts like it, to tell you the truth. It brings more recurring revenue. So that's basically why they're doing it. They're locking in consumers at higher prices. So, for example, you know, I mean, for me personally, the only Apple services I subscribe to are Apple Music and iCloud storage. And so let's say they say, okay, you subscribe to those, you're paying us, you know, altogether, that would be $12 a month. They'll be like, okay, well, you can add Apple Arcade to this. Instead of paying an extra $5 a month, you'll be paying an extra $3 a month. Who knows if I'm going to use it, but I see a deal and I might be like, okay, wow, I want that, right? So Apple's squeezing an extra $3 a month out of me. So that's really the purpose.
So I get why, consumers might like it, why Apple likes it, why investors like it. This is their whole game plan, right? They want to become a services company. That's where that margin's going to be. That's where the growth is going to be. Is the government going to like something like this? I just wonder when, the antitrust, you're too big jam is all about D.C. And Apple really got off the hook the best when all those tech CEOs went to testify in front of Congress. Are they going to like something like this?
Yeah, I don't think the bundle situation is an antitrust issue. Some of their services, like Apple Music, are already available on Android. Amazon got a lot of flack for lots of things at the antitrust hearing you mentioned, but Amazon Prime, the bundle, was not one of them. So no, I don't think this is an antitrust situation.
Hey, listen, while we have you, we have to switch gears because it's a story that we've kind of been obsessed with a little bit. And we just talked about it for our New York audience about Apple and its market in China and WeChat, and President Trump, of course, and his executive order barring U.S. companies from doing business with WeChat, the implications potentially for people who use Apple phones or Apple products.
Yeah, there was a statistic that we wrote about that 95% of people in the survey would give up their iPhone sooner than giving up WeChat. Personally, I don't think it's going to get to that point. I think we've seen this administration make, calls like this between the U.S. and China and put a supposed date, this one being, I believe, September 15th on it, and these things rarely come to fruition. So I would be shocked if this moves forward. Now, if it does move forward, there's plenty of solutions for Apple to work around this. They could basically sell WeChat through a non-U.S. based subsidiary to work around the issues, that being one thing right there. They could do another thing by making it a web-based application. I mean, that's a high step, so Apple would pretty much do anything it can to avoid it being completely removed. And if we're sitting here a month from now and WeChat has gone from the App Store, I would be as surprised as I've ever been about anything.
Hey, if you can be really quick, 25 seconds, Apple suing Fortnite maker after kicking the game out of App Store for payment policy violations. Just quickly, is it something we have to worry about, Mark?
So it's Epic Games is suing Apple, and this is back to the antitrust issues. Apple removed the app. Now Epic is suing them. We'll see what ends up happening.
All right, so stay tuned for that one. All right, Mark Gurman, thank you so much. Highly recommend you check out all of his writings at Bloomberg.com and on the Bloomberg. And for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is coming up next. And coming up next, we're going to talk a little bit more about education and the virus and the impact on communities where colleges and universities are based. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. Carol Massar along with Alex Steele. Jason Kelly is off this week. Coming up, a really important and smart story on the Bloomberg has to do with colleges and universities dealing with the virus and about kind of those stranded international students and how that is ultimately helping out the local communities. So we'll get to that in just a moment. In the meantime, let's get back to your top stories. Some of the news after the close. Here is once again Charlie Pellet.
Thank you very much, Carol Massar. Just getting numbers out of Beijing-based Baidu. That's the internet search engine. Just reporting second quarter revenue, 26.03 billion yuan. Estimates were for 25.72 billion. It does say it will continue heavy investments in technology. Again, just getting the headlines. Moments ago, we did hear from Applied Materials. It forecasts net sales for the fourth quarter. The guidance did beat the average. Analyst estimate sees fourth quarter net sales in the range of 4.4 to 4.8 billion. Estimates have been for 4.36 billion. Applied Materials shares up now by 1.4%. Turned out to be a mixed day for the U.S. stock market today. We did see the S&P 500 index decline 6 points, lower by about 0.2%. Dow Jones Industrial Average was down 80, a drop there of 0.3%. But NASDAQ managed to hold on to a 30-point gain, closing higher up by 0.3%, bringing its year-to-date gain now to just about 23%. The 10-year yield, 0.71%. Gold up 1.9%, $19.52 the ounce. And West Texas Intermediate crude down 0.8%, $42.32 a barrel. Department store chain Steinmart has become the latest retail casualty, joining more than 24 retailers who filed for bankruptcy this year, including Men's Warehouse, Tailored Brands, and Lord & Taylor. Dana Telsey is the CEO of Telsey Advisory Group, and on Bloomberg Television this morning, she said despite the bankruptcies, retail as we know it is not completely dead.
I think overall, the retail therapy in terms of socialization of shopping still means something and it matters when it is safe. And today, the elevated health standards are certainly going to be around for a while. And I think the retail therapy of browsing and shopping are forms of social activity and communication.
The International Energy Agency has cut forecasts for global oil demand as air travel suffers from the coronavirus crisis even more than previously expected. Among some of the airline names today, all lower: UAL down 1.6%, American Airlines down 1.8%, Delta down 1.3%, Southwest down by 1.5%. Recapping, S&P down 6, down 0.2%. Mixed Thursday. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. So everyone's going back to school, all the high school kids, and then all the college kids also going back to school. What does it mean for college towns? Want to bring in Bloomberg News higher education finance reporter Janet Lauren. Now, Janet, you have a really interesting article talking about the international students that have to be here because they're not here. They're not able to take classes here. They can't do it remote from their home country, and how they've been, in essence, supporting some of these college towns.
Yes, a lot of them have been stuck literally for months and months because they can't get home to be with their families because of travel restrictions, because of the virus, because of fear they may not be able to get back. But, often they still have to eat and, they're still occasionally buying books and using other local services. So while most students left campus in March, these students have largely been there.
How many, Janet? Do we have any idea of kind of how many students are kind of stranded? International students are stranded at universities?
Well, in the last school year, there were about 1.1 million students. And as other students left, we know there roughly were about a couple of 100,000 in May. And we know what was reported in a trade group survey of about 300 schools that about 40,000 were actually on campus taking summer classes. But that doesn't count students who are still in the country, perhaps working remotely in internships or doing whatever. But come fall, as we're hearing every day, more schools are going remote only. They may still be lonely on campus, when school starts again.
Do we have an idea? So we talked to the Guy Johnson and I on TV talked to the head of Cornell, the president of Cornell, and they did like resident learning. Like they're doing some remote, but the campus is open. You got to go. Do we have an idea of how schools are dealing with if there are cases and they crop up? Like Cornell's an example, but Cornell has many. They have their own lab, like for testing. Like not every school's going to have that.
Yes, some schools are Northeastern University in Boston, for example. They have their own lab, and they're expected to do about 5,000 tests a day once they're all fired up. Every school is completely different. Cornell made the decision to have some students come back because the reality is most of them live off campus. If you're a college that has mostly residential, you can make the decision that our dorms are not going to be open. So every school is literally doing things their own way. And everyone is generally requiring a COVID test upon arrival. However, some schools are requiring more frequent testing than others. Harvard, for example, is going to ask students to attest that they're crimson clear every day. And it's just going to depend. And, you know, like colleges said months ago, we want to bring everyone back on campus. Now they're saying, you know, we can't do that. And every day there seems to be more schools that are making that realization that it's going to be very, very tricky, especially when you have kids doing what they're used to doing, going to parties, you know, going through fraternity and sorority rush. You know, we're just going to see, you know, we're just going to have to wait and see what happens.
Yeah, I don't know how that works. I mean, to be quite realistic, I think it's really, really, really tricky. The dollar amounts, though, when we think about colleges and universities, we've talked about it with you, Janet, a lot about the sports programs. But, you know, even in this story, you talk about the impact that international students, you know, tend to have on universities, on colleges, and the surrounding economy. I mean, this is big money.
Yes. International students attending American colleges contributed $41 billion in the last academic year. And when you think about it, they're paying for housing. You know, if you're moving from another country and you're living in a campus that's remote, maybe you're buying a car, you're going out to eat, you're buying books, you're buying a computer. You know, in Massachusetts, there were 71,000 international students in the most recent school year, you know, pumping over $3 billion in the economy. You know, we spoke to a student at Mount Holyoke in Massachusetts. And, you know, she's been there. She can go home for winter break. She hasn't seen her parents for a year, a young woman from Karachi, Pakistan.
Yeah. It's pretty remarkable. I mean, just kind of, what were you going to say, Alex? Were you gonna say
I was going to say that, you know, that the idea that students are going to be responsible, like, I'm sure some are, but, like, please. Like, what did you do in college? Like, I mean, not a chance.
I don't know how you do it, especially if people, I mean, to be fair, if you're out drinking, like, you just, everything kind of comes undone.
And
you know
isn't
what I
that
mean?
the point of school, is to make bad choices? Or was that in a different decade?
No, I think that kind of works for every decade.
Yeah, that's what I'm thinking.
All right, good stuff as always. Janet, nice to check in with you. Nice to hear your voice. Janet Lauren, higher education finance reporter at Bloomberg News. She's joining us on the phone from Chicago. All right, let's get back to World and National News headlines. Back on over to Mark Mills in our Bloomberg newsroom. Hi, Mark.
Hey, Carol, thank you. Israel and the United Arab Emirates reached an agreement to begin normalizing relations, a potentially historic breakthrough hailed by American and Israeli leaders as a crucial step toward peace, though it was assailed by Palestinian officials as a betrayal. Israeli Prime Minister Benjamin Netanyahu praised President Trump for his role in the agreement.
I want to thank President Trump for his critical help in brokering this historic accord.
President Trump Thursday directly tied his opposition to a proposed $25 billion financial lifeline to the Postal Service to his criticism of efforts to encourage mail-in voting during the coronavirus pandemic. Trump said if there's no extra funding for the post office, then there won't be enough money for universal mail-in voting. Senate Minority Leader Chuck Schumer says voting by mail is critical.
President Trump has said he doesn't like vote by mail, but in COVID, we're all going to have to vote by mail, and every vote should count.
Joe Biden says all Americans should wear a face covering when outside for the next 3 months at a minimum. Citing public health experts, Biden said a mask mandate would save more than 40,000 lives in the next 90 days. Meanwhile, President Trump took to Fox Business News to ramp up his attacks on Democratic vice presidential nominee Kamala Harris.
And now you have a sort of a mad woman, I call her, because she was so angry and such hatred with Justice Kavanaugh. I mean, I've never seen anything like it. She was the angriest of the group, and they were all angry.
The New York State Department of Labor has rejected as fraudulent more than $1 billion in unemployment insurance claims filed since the start of the coronavirus outbreak. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Alex Steele. I love this story. It's on the Bloomberg. Jason and I talk a lot about, college athletes, right? Because it's, we were just talking with Janet about the amount of money that kind of comes into these universities, especially when it comes to sports programs. And yet these college athletes, don't get compensated really for it. And so there's a group of Democratic senators led by New Jersey's Cory Booker, one of my senators. He is pushing, and that group is pushing for a college athletes bill of rights to allow compensation and health care coverage for the players who power a $16 billion industry.
Yeah, so apparently the plan's going to allow some personal endorsement deals, provide healthcare coverage for injuries for at least a decade, which would be huge considering that at least in football, the concussions that go on there, plus give athletes more of a voice in how college sports are governed. This feels like total basic stuff.
I know. Totally. Right, because so far they haven't been allowed to get any kind of direct compensation, right? Or they can't, when there's money made from marketing their name or likeness, I think about some of the games that are out there, they get nothing. And as we know, we gave you the big number, but they generate billions of dollars in revenue for so many schools, especially some of those higher profile schools.
I mean, obviously the argument is like, well, you get free education, et cetera, but I don't think that's the point. I mean, it's true, you do, but they're also not going to support your educational career. Like, they're giving you a free education because they need you to play so they make money.
And if you get hurt?
Totally different. Well, the hurt thing, that's huge, especially if you have concussions. Like, that could go on, your whole life. So providing that extra health care, I feel like, would be a really big win for the industry that's sort of in the last, decade been highlighting all the risks.
Yeah, exactly. And so looks like this is gaining some momentum. I think they're looking to draft this into formal legislation in the coming months, and we'll see where it goes. But man, this is a pretty big issue, no doubt about it, especially as you got players who aren't able to play right now, and you do wonder what that means kind of longer term for their careers. This is Bloomberg.
Updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Applied Materials shares now higher by 2% after giving a bullish forecast for the current period on increasing orders for equipment that's used by makers of computer chips. Turned out to be a mixed session, a down day for the S&P 500 index. Equities pulling back from the cusp of records as investors mull the stalemate in stimulus negotiations along with signs of an economic recovery. The S&P 500 index lower by 6, down by 0.2%. The Dow down 80 points, lower by 0.3%. NASDAQ higher by 30 points today, up 0.3%. 10-year down 10/32 with the yield creeping up to 0.71%. Gold up 2.1%, $19.55 the ounce. And West Texas Intermediate crude down 0.7%, $42.36 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week. And Alex, great, to check in with our next guest, because as we were planning for this, we were thinking about everybody's so focused on a vaccine for COVID-19, but, we can't forget that there are other companies working on treatments and doing research that is for many ailments that really affect our global population. And it's important to kind of keep moving forward on all of that amid the health crisis. And one of those companies that's doing that is Sangamo Therapeutics. Dr. Sandy McRae joins us once again on the phone from California. Dr. McRae, nice to have you back with us. Remind our audience about the kind of work that you guys are doing, because you're doing genomic medicine. I guess we have a little technical problem, and hopefully we'll get back to Dr. Sandy McRae at Sangamo Therapeutics. But, I do think this is an important issue, Alex, and I've heard this from a lot of the medical community. You know it, right? I think you recently did, kind of a routine medical procedure. But I just think we have to remember that we've got to move forward on all this stuff, right?
Yeah, we can just call it out. It was a colonoscopy.
I was trying to. As soon as I started going for it, I'm like, oh, that was not like. I need to check with her if she's okay with this.
Me, I'm pretty much an open book. I tell it like it is, and if you had one, they're like the worst things. But to your point, the routine stuff that you got to do, you got to take care of yourself, and the drugs and therapies also have to advance too. So we can't forget about that. We're all in the middle of this pandemic.
There's definitely nothing fun about that. I'm getting ready for one as well. So both Alex and I are out there. Let's bring in Dr. Sandy McRae, CEO at Sangamo Therapeutics, on the phone in California. Dr. McRae, it is nice to have you back with us. And we were discussing kind of on the introduction to you that it's really important that companies continue to work on treatments for the many ailments that are out there that affect our global population and that aren't about COVID-19.
Absolutely. Of course, we all want the very best for COVID, and so many of my biotech colleagues are working hard to find the solution for it. But the work that we do that will take us to genomic medicines takes time and diligence, and we have to keep going throughout this. And I'm delighted that our labs have stayed open and people are hustling from home.
So tell me about the work that you do and sort of how your development has been in the last, say, 5 or 6 months, and kind of what your outlook is for the rest of the year.
So our labs have stayed open throughout this period. Our lab staff are socially distanced. California understands the importance of us. We're seen as a vital industry. And so the people are routinely tested and are able to keep going in the labs. To allow that, the office staff stay at home and work happily in their bedrooms and studies. And we have driven forward our programs. And even just in the past, this month, we signed a deal with Novartis to apply our technology to neurodevelopmental disorders. And this is an exciting thing because we all know children with autism or autism-like conditions. And Novartis feel that with their understanding of the disease and our technology, they can bring the two together to perhaps help children in the future.
Yeah, genomic medicines, I think, is such an interesting area because we're realizing something, especially something like autism, we understand there is a spectrum, right? And so not every treatment is as effective, the efficacy for every individual who has autism. It just doesn't work the same. So we really need to understand the genetic makeup of that particular autistic case or autism. And that's what this is about.
Absolutely. I think you're spot on there. There are some forms of autism. It's a wide church. And there are some forms where there is a clear link between a gene and the presentation of the child. And that's what Novartis are hoping to address with our medicines. Many other diseases, many other parts of autism have not been clearly linked to genes, and the cause is unknown. But the hope is by having this foothold, this beat.
Okay, ladies and gentlemen, time's up for today. I hope you had a good day. Anybody who followed us, well done. We're at 900 pounds today. I'll speak to you all, as always, tomorrow, 8 o'clock UK time. Stay safe and have a great evening. Bye for now.
Looking for a COVID vaccine.
All of the above. The work that we do is designed to build a fully integrated company, and we intend to take medicines forward ourselves into the clinic. But our technology is so unique that we now have 6 pharma companies that have partnered with us in raising $700 million in upfronts and $7 billion in biobucks as they take our technology and apply it to the